Our thinking is that the economy continues to ramp up its speed and its capacity. America's going back to work. Wages are moving up in a measured and reasonable manner. The overall economy is very strong. The stock market should follow it over time. There will be bumps in the road where it gets a little overvalued and a little undervalued. But I think what we're going through right now is just a normal bout of volatility.
So, Brian, what occasioned the bump that the market has been going over the past few weeks?
Well, I mean, look, we've had a very prolonged period of upward gains in stock markets, so it's no surprise to have some bouts of volatility. I mean, I think there's a few things holding the market back. You know, we have uncertainty with regards to Fed policy. We have uncertainty with regards to trade policy. We have uncertainty with regards to the midterm elections. So anytime you have policy uncertainty, you could create some volatility in markets. But I think we got to be really clear. This is not what the end of cycles look like. The end of cycles, for the United States, inflation will be a lot higher than here. The Fed will be a lot tighter. High-yield spreads will be blowing out. The dollar will be a lot stronger. So, you know, this type of volatility is to be expected around uncertainty around policy. But importantly, this is not the end of the cycle.
Which kind of sectors do you like, David, since you anticipate that the economy will continue to grow and expand?
So we still favor cell towers, which is backed by all the trends in wireless, and auto parts, as well as specialty aerospace parts companies.
Why auto parts? The automakers have been doing horribly this year.
But true. Auto parts, because as America goes back to work, they're willing to spend more on the car, and the car they need to get to work. And that's why most Americans own a car, is to get to work.
Brian, are you favorably inclined to growth stocks or value or a little of each?
I would still be inclined to growth stocks. I mean, I know that there's this narrative that the U.S. growth rate is up significantly, and that if the U.S. gets to a new higher sustainable growth quarter over quarter, that's going to unlock some of the value in the market. I view it somewhat differently. I think that, yes, we have had a nice bump as a result of the stimulus, but I'm not so sure that that is sustainable, given that we've already really closed the output gap in this country and the job market is already tight. So my view is that the dollar's been stubbornly strong this year. The Fed is raising interest rates. I actually think the U.S. economy starts to moderate into 2019. And in my mind, that is an environment where we continue to favor growth. When we favor value, the next time we favor value, I believe that's going to be at the depths of the recession into that recovery. And I think we're a long ways away from that.